Good morning, everybody. This is Todd with the Daily Nitty Gritty Insiders video. Hope you're having a fantastic day today, and the markets have been treating you well, guys. We come to the end here of the holiday trading, and the last 2 weeks have been shortened by first Christmas and now this week New Year's, which is fine, and it's good to be able to have that time off. But the markets tend to react a little bit strangely sometimes, and so the trading can be made even more difficult because of that fact. And so now that we're done with that, now that the trading is over, we can get back to hopefully a market that's going to be more deliberate in its movements. And we're going to talk a little bit about that today. But first, I wanted to start off with kind of our major news items, which were the non-farm employment changes and the unemployment rate for this last month. Now, the forecast for the non-farm employment changes was 150,000, which really is telling us the number, the change in the number of employed people or workers from the previous month. Of course, it's non-farm, so it means it's not including those in the farming industry. This is the monthly report that comes out, and so it forecasted for there to be 150,000 new jobs, or a change in the number of jobs. Now, the actual number is 155,000. So it came out more positive than what the forecast was, which is always good. Now, the unemployment rate forecast was to come out at 7.7, which is what it was the previous month, 7.7%. Actually dropped to or increased to 7.8%. So it went up a little bit on that. So not drastic changes there. The non-farm and the unemployment rates can have dramatic impact on the markets, and we saw a little bit of movements, especially pre-market on the stock market, the currency market. We had some quick movements, although not drastic moves in either case. And so with that, we need to understand that when this news comes out, so that we can be prepared for that. That is what happened with the reports this morning. Now, the stock market today, things are going down right now on this report and on what's been happening, but very gradually. It opened up a little bit and moved down a little bit. Oil today is still in that low 90 level, and gold dropped back down to below the 1650 level. So a big drop in gold prices today. Okay, so now we're ending this week. We're going to get back into our quote normal type of trading. And so what I want to look at here, first of all, I'm going to change. Let's see if I can change the color to this without getting too crazy. All right. So when we look at a candle on a chart, we're looking at a couple of things. And generally speaking, we've got a wick or a shadow above or below the candle. Now, it could be a bar, and a bar is going to be very similar. But we're looking at the high, the close, the open, and the low here. Open, high, close, open, high, close, and low. And if this is closing higher than where it opened, we know that the price has been moving up and it's green. Now, if it was a red candle, it would be that it's moving down. These candles or these bars or whatever you're looking at are independent in relationship to the time. And so, or it's dependent upon the time, but it will look the same. So this could be represent a day, it could represent a minute, or anything in between. We really don't know until it closes. Once it closes, then it's fixed and it's not going to move anymore. And so as we look at trading and as we look at candles, we want to be able to look for markets that are moving deliberately. And so as we look at our candles here, and I'm not going to draw out every single candle here, but if we see something that is moving up and pulling back and moving up and pulling back and moving up, we're going to consider that a deliberately traded type of a market. And that's what we want to be trading. If, on the other hand, we get, change my color to something else here. Let's say that instead of looking like that, it's doing this type of movement. And even though it is ending up at the same place here, the volatility or the choppiness is much greater. And a lot of times that occurs because instead of having nice deliberate candles, we get these real long range candles. Now the body may be the same, or the body may be really big, drawn here, but it's causing the markets to be a little bit unstable. And so if we have candles that are really big, followed by candles that are, really small, followed by candles that are really big, then that's going to cause the market to move in a non-deliberate fashion. And we want to ideally avoid those situations. So look for the markets this upcoming week to become a little bit more deliberate in their movements. Make sure you evaluate the charts so that you're not dealing with times where there's a lot of excess volatility. And if you can do that, you'll keep yourself trading using the simple trading method in a better way. Because the more deliberate the market is, the more higher probability of our trades coming out the way we want them to. So have a great weekend, everybody, and we'll be back next week to take a look at how things are going and answer any questions that might arise. So until then, have a great day, and we'll talk to you soon.